Man, oh man, what a relief it is to have my U.S. taxes done. And that's what the video is going to be about today. Why you have to do your U.S. taxes even as an expat, living and earning your money on foreign soil, and how to do it.
All right, let's get started. Do you have to file tax returns if you're an American living outside of the States? Yes, you do. Even if you don't owe the IRS any money at all, they still want you to file a tax return. In particular, I think this is for several reasons, and one of them is because if you earn over a certain amount of money, then the IRS wants a share too. So let's just get right into it and see how to do your U.S. taxes from abroad. As a disclaimer, I'm not a tax consultant by any means, but I have inquired by the IRS. If you call their phone number, they will help you with the data entry. They'll answer questions for you. So that's a good resource. Use the IRS if you need to. Again, as a disclaimer, I'm not a tax consultant, so use this as entertainment value or just to get an idea of how I do it myself. So let's go ahead and start with the Form 1040. All you have to do is type into Google IRS 1040. And I've already got the form here and I filled it out, in fact, because I already did the video and I did it wrong. So here, I have to restart it. All right, for our example, we are doing a guy who's married, but whose wife is, let's say, German or some other nationality. So he's filing on his own as a U.S. citizen. And he's got just a normal job. Let's say that it's John Doe, and he works as an engineer in Germany and earns 75,000 euros. So I've already done the data entry. Here we got John Doe with his social security number. He's married, filing separately, and he lives in Munich at 123 Hauptstrasse. All right, the foreign country name is Germany, and we're in Bavaria. Digital assets, no, we did not get any digital assets, and nobody can claim me as a deduction. Thankfully, I'm not blind. Now, if you have children, you can enter them here. We got a little Jimmy Doe here with his social security number, and that's my son, and you can get a child tax credit. So in the end, if you do owe any taxes, you can get a child tax credit. In our case, we will not need a tax credit because we're going to be below the threshold of earnings for excluding your foreign earned income. So what we're going to do here is put in everything that we earned. I said 75,000, and that equals $78,864. Let's take a look at how to calculate that. So we're going to move over to the 2555 form. That is a really important form that you need for excluding your foreign earned income. Super important. Okay, John Doe, put our name up there again with the social security number. Living in Munich as an engineer, and we work at BMW. BMW is in Munich, and that's a foreign entity. Now, we already filed this form last year in 2021 because we've been living in Germany since, let's say, 2018. So we're going to say, have you ever been revoked the exclusions? No, I haven't. Of what country are you a citizen? USA. And did you maintain a separate foreign residence? No. Where is my tax home? And when was it established? Okay, so what we're going to say is that we've been working in Germany. That's been our tax home since January 1st, 2018. Moving on to part 2. Are we a bona fide resident? Now again, here is the spot where you can download the instructions. Just type into Google IRS 2555 instructions, and it will come up with a PDF where you can read everything about every single point here in the document. But we're going to say our bona fide residence began on the 1st of January 2018, and it continues. I got that answer from calling the IRS myself. I said, what should I put there? I still live here. So yeah, continues. And houses are expensive here. We haven't purchased a house, but we're renting one. Did any family live abroad during the tax year? No. And let's see. Have I ever submitted a statement where I claim bona fide residence that I'm not a resident of that country? No. Are you required to pay income tax? This is the important thing. Yes, I am required to pay income tax. Now, the next part is you have to tell the IRS if you were in the States. Because it could be that if you're in the USA, you may have earned money physically while being in the USA. Even if your German company or Mexican company or whatever sent you to the States to work and paid you in euros or pesos and is taxing you in euros or pesos, you still have to tell the IRS, yeah, I was in the States and either I was on vacation or I was working and earning money, because they want to know where you physically earned the money. We're just going to say in our case, we were for the month of August in the States, no days on business and therefore no money. We are in Germany on an unlimited residence permit, and it is not limited, so no. Did we maintain a home in the United States while living abroad? Okay, if you got an Airbnb or something like that, or a house that you rent out full-time in the States, you'll have to enter that here. Part 3, we're going to skip that one. So you can either qualify to exclude your foreign earned income based on the bona fide residence test or on the physical presence test. So you have to look and see which one of those applies to your situation. All right, all taxpayers, we got to put in the full amount that we earned. And we also have to calculate that. So I said 75,000 euros, and if you just exchange rates, IRS 2022 exchange rates, you're going to get this right here, this information. For 2022, in the Eurozone, it was 0.951 as the exchange rate. So what we're going to do then is divide our 75,000 by the 0.951 to get our result, which is 78,864. So that is what we put in there. The rest of this does not apply to our example, non-cash income or allowances. We just have a normal job, so we don't get any of that stuff. Any other foreign income you can include. So in total, though, with just our normal job, we got our 78,864. And on line 26, we put our entire foreign earned income right here. So 78,864. Are we going to claim the housing exclusion? No, I don't think that we have to do that. So we've got here on line 27, 78,864, and let's move down to part 7. Before doing that, part 6, the housing exclusion or deduction, as far as I understand that, if you did earn actually quite a bit of money, like over the threshold of 112,000, this may help you if you have to pay a ton of rent. So consider part 6 if you got to pay a lot of rent and if you're above that 112,000, which we're coming to now. So maximum foreign earned income exclusion is 112,000, and we were in Germany for 365 days, which means that we can put 100 here on line 39, multiply 37 by 39, and we get 112,000 as our maximum amount. If you were in Germany for less time than that, it would be a percentage of that full amount. But we were here the whole time, so 112,000. Now we have to subtract line 36 from 27, so subtract 0 from 78,864, and we get 78,864. And the smaller of these two is what we put on line 42. This is our maximum foreign earned income that we can exclude, which is great. So here we got 78,864. That is the total dollar amount we're going to exclude. So we got to go ahead and put that now on our Schedule 1. So on Schedule 1, we enter our name and social security number again, and these things don't apply in our example case. No alimony, no rental real estate or farm income, but what we do have is the foreign earned income exclusion. And you'll see that the 78,864 we got to put in parentheses, because for the IRS, parentheses means a negative number. All right, the rest of this doesn't apply, and so in the end, we have 78,864. I always include it in parentheses so the IRS knows that's a negative amount. All right, and now on page 2, adjustments to income. I don't have anything here to adjust in our example case. No alimony or student loan interest deduction or things like that. We're just going to take a very simple case. Now let's go back to our 1040 form, And so now we got to put in our total earned income, which is a positive 78,864. We put that on line 1A. We don't have any other Medicaid or employer-provided adoption benefits or anything else. So on line 1C, that's our total, 78,864. Again, these things don't apply in our simple case. No capital gains or qualified dividends or IRA distributions. I don't have any of that. But what is very important is here, line 8, the other income from Schedule 1, line 10. That is our foreign earned income exclusion. And so we're going to put our negative 78,864 in there in parentheses. Now, if we add up all of the lines, 1Z, 2B, 3B, 7 and 8, what we get is a plus 78,864 minus 78,864. So our total income is 0, which is great. Then adjustments to our income, that was the second page of Schedule 1. We didn't have any adjustments to our income in that case. So if we subtract line 10 from 9, we have 0. Then we'll take a look at our standard deduction. So since we are married, filing separately, our standard deduction is $12,950. 13 qualified business income deduction we don't have. So if we add up these two things, we get $12,950 as our standard deduction. Now we subtract line 14 from 11. And since 0 minus 12,950 is a negative number, that is going to mean we enter 0 here. Our taxable income is 0, therefore, which is great. Yay! We got no taxes to pay. Then we just got to finish filling out the document. All right, because our total tax is 0, for our tax and credits, we end up having 0 as well. For our total tax, we also don't have any payments that we need to worry about. That's also 0. And so our total refundable, our total payments or refundable credits is 0, and our total payments also 0. And our refund, therefore, is 0. And the amount that we owe in our example case is 0. Now, you can print out your 2555, including like a PDF of whatever tax software you use in your country, showing what you earned and a calculation of that amount converted to dollars. Print that out, print out your Schedule 1, and print out your 1040. And here, don't forget to sign it and date it. Then you can send it in to the IRS, and they show where to do that here. If you don't owe them anything, you send it to Texas, to Austin, Texas. And if you do owe something, you have to send it to Charlotte, North Carolina. All right, guys, I hope this video was helpful for you. If you got questions, just let me know. Write into the comment section down below. If I made any mistakes, you know, as I said in the disclaimer, I'm not a tax consultant, but let me know also what you think in the comments down below. And check out my other videos. If you like what you see, subscribe to the channel. It's totally free. Until next time, I say habudiri, fiat and ciao.